Welcome to this stock review of Bharat Dynamics Limited, or BDL, often called the Missile Arsenal of India. Unlike manufacturers of large platforms like ships or aircraft, BDL is a quote consumables player, as missiles are consumed in warfare, ensuring recurring revenue. BDL is expected to pivot to export aggression for higher margins and enter a volume supercycle, with revenue expected to grow at over 30% CAGR for the next 2 years. The Q2 FY 2026 financial results showed a significant turnaround, with revenue doubling year-on-year to 1,147 crossing. Net profit was 216 crossing, up 76% year-on-year, driven by high-margin missile contracts. However, the EBITDA margin saw a slight contraction to 16.4% due to higher raw material costs and a product mix shift. Management expects margins to stabilize near 20% in Q4. Strategic triggers include a major export order to Armenia for the Akash system, which yields better payment terms and margins than mod contracts. New Astra and Amoga 3 are replacing Russian systems and reducing royalty payments. Furthermore, BDL is aggressively indigenizing critical supply chain components. Key risks include execution lumpiness, with revenue sometimes hitting zero in weak quarters, requiring investors to tolerate volatility. Also, supply chain dependencies on critical components can delay shipments. Finally, the valuation risk is high, with the stock trading at around 84x PE, a level that could lead to a sharp derating if delivery schedules are delayed. Compared to peers, HAL is the steady compounder with predictable returns. BEL is the safest play, as its electronics go into every platform. BDL, however, is the high-torque cheetah, offering the potential for 30% growth, but also a 20% fall based on execution. BDL is currently trading at a corrective buy opportunity, around 27% below its all-time high of 2,097. The valuation is premium at 84x PE, but digestible due to the scarcity premium, as BDL is the sole pure-play missile manufacturer in India, with a monopoly on key products. For the future outlook, FY 2026 is the execution year. The stock has strong support near 1,450, and Q4 is seasonally the strongest quarter. FY 2027 is the volume expansion year, with analysts expecting revenue to cross 4,500 to 5,000 crossing. The consensus target is 1,700, with a bull case of 2,150 if new export orders are announced. The final verdict is a, quote, BIY for aggressive investors, with a strategy to accumulate in the 1,480 to 1,530 zone. The thesis is that BDL is the only way to play the theme of modern missile warfare. For conservative investors, quote, BIY-BEL is recommended, as its 50x PE offers better safety with similar industry tailwinds. Keep allocation to about 5% maximum due to BDL's high volatility.